All right, welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy, and we're getting after it here on Monday morning, getting started for the first trading day of October. We ended everything up last week, and boy, it was a tumultuous week, but we're starting off kind of that way again today. Let's take a look and see what we've got going on with corn. Corn's only up a penny, so that's not that tumultuous, is it really? December's up just 1 cent to 678.5. 6 cents from the lows, I suppose, but you're not too far from the highs. We're kind of in the middle of the day's trade range. March is up 1.25 cents to 685.25. So we can kind of leave that as it is and move along to see what the beans are doing. They were a little bit better today, and they still are. November's up 7.25 cents to 13.72, while Jan's up 7 cents to 13.82.5. Okay, not a lot to be talked about there. Let's see about Chicago wheat. This is subtly, it's mixed, is the best way to say it. Deese is off 2 cents, 9.19.5. That's 9.19.5. And that's pretty much in the middle of the day's range, maybe not quite. And we've got March off a penny to 9.31 even. So that's 11 cents from the lows, 17 cents from the highs. So that too is in the middle of the range. And May's comes in sharply unchanged. So not a lot happening in Chicago wheat. Let's take a look at what we've got going on in the hard red wheat in Kansas City, KC hard red wheat. That's up 5 cents December, 9.96.5. We had a 10 in front of it earlier, as did March, 9.91 even. That's up 5 3/4. But we've settled back in on both of those. So we're just below $10 on those two lead contracts in Kansas City. Let's see what's happening in Minneapolis. Minneapolis got 1.25 cents higher in that Deese to 9.83 1/4, while March is up 3 3/4 cents to 9.88 3/4. And finally, here's the dog. It just does not want to run. 221 points lower in that Deese contract. Cotton's at 83.13. Let's bring in Todd Horowitz. He's with Bubba Trading. I think he's still in Las Vegas. I'll have to check by yeah, there we go, I guessed, right?
Yes, I am.
Yes.
No more. We're not making any more clothes. No more need for cotton anymore either.
Exactly right. Yeah. Good morning and welcome in from Las Vegas with Bubba Trading, Todd. What are your thoughts here? I mean, there's I was just talking to somebody earlier this morning, and actually over the weekend to some other folks as well. We've had a lot of stuff going on. I mean, I don't want to say a lot to worry about, but boy, oh boy, between Credit Suisse and Deutsche Bank maybe faltering, and the Fed's emergency meeting, and all the data that we got last week, there's just a lot going on.
Well, I think you should be worried. Listen, I'm not a fear guy, right? But I think there's a lot to worry about right now. But when we look at markets, there's no volume. It's like, if you asked me if we were close today, I could make a case that we're not even open today with the volume we're watching. There's a lot of issues that we continue to hide from. And, you mentioned the banks, they allow these banks to get so over leveraged. And now with rates going bananas, higher, I mean, the 10-year almost got to 4% on Friday. And now we've come off a little bit.
It went through it. It did go through it. 405, I think, was the higher. Briefly, 402 to 405.
And the inverted yield curve, I mean, 1 years are over 4%. So you've got so many things to think about that are not very healthy for an economy, and yet nobody wants to take care of business and do what needs to be done, and simply using your own natural resources to lower inflation instead of artificial is a problem.
Well, that's when you only really want to take a look at one side of the equation, right? We're beating up everything with interest rate hikes, and that's proven to be not so good, and that's why everybody will wonder why we're up 650 points today. There's been a backtrack of what the Bank of England wanted to do, or at least the government, the Liz Truss premiership government wanted to do over there. They repealed some of those tax breaks, and number one. And number two, we had an ISM number here that was not good. I mean, we've got the Fed they're bent on making sure that they get out in front of inflation, but they're going to kill the economy first, and that's the problem. However, with the news we got today about the economy slowly but surely dying, investors take that as a positive, right? We're going to buy it because it looks like they might be done sooner with these interest rate hikes.
It very well may be, but where was the Fed 10 years ago when they should have been raising rates and making it natural, where inflation was more natural? Again, the bottom line is we can see the input costs. We can see grains going a lot higher. Yes, they're just kind of vacillating right now, but we're really vacillating on no action as we get through the harvest. But when you find out that there's a food shortage, which nobody's reporting on, and when you find out that you're paying $10 for a loaf of bread next year, these prices are going to be a lot higher. There's not going to be any supplies.
Yeah. All right. Well, we'll leave on that note. We're going to go away. We're going to pay some bills. Stay right there, Todd. Don't go away. We're going to come back and talk more with Todd Horowitz for Bubba Trading in Las Vegas after this. All right, welcome back. Thank you for joining the show. Let's go real quick to live cattle. We'll get back to our guest analyst. Live cattle in Chicago. Look at this. We're up 82 cents in D's to 147.87. 95 cents higher right behind it in Feb to 151.60. Not bad there, right? Feeders. What do we have happening in feeders? That's a 77-cent rally if anybody has ever seen one. 175 spot 40 in November. And that is just closer to the lows, but still in the middle of the day's range. 90 cents higher in Jan right behind it, 176.57. And then finally, let's take a look at lean hogs. What do they got for us here? We're up. Look at that. D's up $1.60, 77.82. We'll take that, right? Let's get to our guest analyst, Todd Horowitz. Todd, thanks for sticking around and waiting in the wings so patiently as one does. What are your thoughts here when it comes to the meats?
I think they're fairly priced. I think, I wouldn't be surprised if crude continues to go higher, and there's talk that OPEC is not going to cut and they're going to tighten supply. And we're obviously seeing a very big rally in crude oil today. I mean, I think the meats are directly tied to crude oil. It's part of your budget, and I think that we're probably let's say in feeders in a $10 range up or down. I don't think they're going to break and go way lower. I just don't think they have a lot of room to go way higher. I think the wild card in this space is hogs until they get back to $1. And if they get back to $1, I think that's about as far as they can go. But I don't think we're going lower. I just don't think there's a lot of room to go higher.
Should we worry about this? Is something kind of is a little bit of a tangent. We don't have a ton of time. Are we worried about input prices for spring of 23 yet?
I'm worried about it because there's no sign that we're going to reduce them. We have the power to reduce all of them and take care of the entire economy, but for some reason we don't want to do it. And I really can't figure that out, why we don't want to solve the problems in the meantime while we're waiting. And that's a much bigger problem and a much deeper topic to talk about.
Todd, why would we want to make a light bulb that doesn't burn out? It put a lot of people out of work, right? That's one thing we would never do that. All right, appreciate you coming on. If you can smell the skepticism in what I'm saying. Todd Horowitz, Bubba Trading in Las Vegas, thanks for being on. We're in Nash Vegas, where I can throw this back over to Janet.